Aloha and welcome to Jakesbook third quarter 2012. If we look back 15 months to the second quarter of 2011, only 4% of the country saw positive price appreciation. The rest of the nation was flat or saw a decrease. Now if we look at the second quarter of 2012, we see almost the opposite trend, where 86% of the country has seen positive price appreciation and only about 4% saw a decrease. As a state, Hawaii was up 6.2%. The key positive indicator for the third quarter is the Honolulu housing starts number. Historically, there are 1,550 single-family home starts each year, which keeps pace with the 1,600 new households that are formed. Annual housing starts in Honolulu are now running at 893. This is down 40% off of Honolulu's 20-year historical level. This implies a potential housing shortfall as Hawaii's economy stabilizes.
This housing shortfall is evident in months' supply of inventory on the market. In the third quarter, supply is down to around 3 months for both single-family homes and condominiums. Months' supply below 6 months is considered a seller's market.
There were about 20% fewer single-family homes and 14% fewer condominium active listings this September than there were in September of 2011.
We can also see a shrinking supply in the number of new listings. Single-family homes are down almost 15%, while condominiums are down 10%.
This decreasing supply may be responsible for the continued upward pressure on median sales price in the third quarter. Single-family homes are up 8.8%, while condominiums are up 4.1%.
In the third quarter, we saw an increase in closings by about 4% for single-family homes and about 3% for condominiums.
Third quarter pending sales are up significantly by 47% for single-family homes and 33% for condominiums. A surge in pending sales implies that the sales strength will carry over through the end of the year.
In the third quarter, it took less time to sell a property. Both categories are down to around 30 days.
Homeowners in the third quarter received a higher percentage of their list price, by about 1 to 2%.
Looking at Hawaii's employment by sector over the last 3 years, we see government, education, and healthcare employment remaining firm. Hospitality and professional services look to be turning up, while trade and transport, financial and construction employment are still lagging.
In this graph that goes back to 1975, we can see the last 5 U.S. recessions highlighted in red. The line in the graph represents an index that tracks Hawaii's economic activity. If we focus on the last 4 years, we can see Hawaii's economy slide downward until the spring of 2010. In the past 2.5 years, since spring 2010, the index is up 4.09 points.
Statistics for August show visitor days are up by 10.1% compared to the same period last year.
In this 3-year chart, we see monthly visitor arrivals to Hawaii are up 5.33% year over year.
We also see visitor spending in Hawaii going up. In August, it rose 20%. In summary, for the third quarter of 2012, there was a nice bump up in prices for both categories, which may have been caused by the continued shrinking of supply. There was a decrease in the amount of time for homeowners to sell property and a stabilizing of Hawaii's economy.
In the third quarter, we had 60 neighborhoods, shown here in red, with increased sales and decreased inventory. We had 3 areas shown in blue with decreased sales and increased inventory. Areas shown in green were neutral compared to the same time period last year.
The neighborhood of the quarter for this third quarter of 2012 is Waikiki.
Waikiki has seen a strong decrease in supply, an increase in demand, and These changes to Waikiki's supply and demand may have caused its median price to rise 28% in 2012.
These numbers earn Waikiki the neighborhood of the quarter.
Thank you for watching, and until next quarter, aloha.